we are seeing storms in the forecast. And that storms as essentially three major clouds that I would identify for you. You can list many others, but the short-term clouds that we see are, number one, the level and the burden of debt that weighs on the shoulders of sovereigns and on the shoulders of corporates. Today, we have about 164 trillion of debt, which represents roughly 225% of global GDP. That is way more than whatever the world has had, including after the Second World War. That's number one. Number two, I would mention financial fragility, which will probably result in significant capital outflows from emerging and low-income countries, which will find their way into more prosperous, remunerative, and better yield shores, including as a result of monetary tightening, as we will probably see it in the United States as a result of the stimulus-engineered growth that we are seeing on an economy that is already at full potential. The third cloud, that is probably the darkest one, is the determination of some to actually rock the system that has actually presided over the trade relationships that we have all undertaken and enjoyed to some extent over the last many decades. And that cloud, which would actually try to put a brake on the terms, the rules, and the movement of goods and services around the world, is clearly one that we should be watching, and one that is, as the presidents before me have indicated, largely based on the confidence. Now, a few words about Russia, as I promised President Putin. Russia has actually, and I can talk about it because we just completed the review of the Russian economy, Russia has put in place one of the most admirable macroeconomic framework that you can think of. A rainy day saving fund, letting its exchange rate float, introducing inflation targeting with success, and shoring up the banking system. And that has helped Russia weather very difficult circumstances in the last 3 years, Mr. President. It has also generated for Russia a very low debt, a very, if not non-existent, fiscal deficit, and very low unemployment. Now, is this entirely satisfactory for President Putin and his ministers, including his new vice premier in charge of economy, finance, and everything else? No, because clearly there has to be an improvement in productivity. There has to be diversification out of the oil and gas economy. There has to be boosting investment in health and education, reducing market concentration, and integrating more in the global economy.